Hey there, welcome to another episode of the Block Crunch podcast, where we share condensed insights from builders, entrepreneurs, and investors in crypto. I'm your host, Jason Choi. Now, the issue of custodianship and design in crypto are closely interlinked. In other words, there aren't a lot of very well designed and user-friendly wallets out there for people to securely store their crypto assets and cryptocurrencies. Right now, the easiest way to store your crypto assets is probably through a third-party centralized entity like Coinbase. Now, while Coinbase is an amazing company, in my opinion, a lot of people think this is antithetical to what cryptocurrencies was about, which is self-sovereignty, controlling your own financial assets, controlling your own identity, controlling your own data. But at the same time, existing solutions for storing your own private keys, for owning your own assets, are pretty clunky and hard to use, especially for laymen and newcomers to the crypto space. And in the past few months, we have seen a growing number of wallet apps that are trying to solve this problem by implementing better design from a user experience perspective. And one such project is Balance. In 2018, the Balance team shipped a web app for interacting with popular Ethereum wallets called the Balance Manager. And they're now focusing on creating a great iOS wallet for storing tokens and interacting with the apps. But what's more interesting to me is that one of the long-term visions that the Balance CEO Richard Burton has played around with is creating a crypto bank, a decentralized autonomous bank. As to what that means and what that would look like, I'm very excited to invite Richard onto the show to talk more. So without further ado, let's buckle up and dive right in.
This is this worldwide phenomenon.
Now, I'm incredibly excited to invite Richard Burton, the CEO of Balance Software, onto the Block Crunch podcast to talk a little bit about what he's building at Balance, as well as what his long-term vision for a crypto bank is. Now, previously, Richard also spent some time at Ethereum and at Stripe before raising $1 million on crowdfunding site WeFunder for Balance. He's also very active on Twitter, where you can follow him at Rick Burton. I met Richard at his Summer of Ship event last week, where I sat as a quiet fly on the wall to absorb as much as I can. And there he shared his thoughts on creating a crypto bank, the challenges facing fintech, which I would love to dive deep into in this episode. So it's a very special episode for entrepreneurs, VCs, and enthusiasts in both fintech and crypto. So welcome to the show, Richard.
Thanks very much. Just to be clear, I wouldn't describe myself as anyone who built out Stripe. I was lucky to be there for a few months and tried to help where I could. I was lucky enough to see Patrick and John at work as they built the company. And really with Ethereum, I just designed a few little mock-ups which helped Gavin and Vitalik kind of put into pixels some of the ideas in their head. But both times I was involved at an incredibly early stage, if only for a few months. And where it's not so much that I got to contribute meaningfully, but I was able to see these projects at work when there were just a few dozen people. It was very exciting.
Got it. That's awesome, because that's actually going to be my first question for you. Basically, dive deeper into what some of those experiences, what your background is, and also what you're working on right now.
Yeah. I think it was very clear to me when I read the TechCrunch post why Stripe was going to be successful. And this was in 2011. And that was because I'd sold a little bit of clothing online as a kind of t-shirt website or hoodie website that was called Hoodieasy. And I'd integrated Google Payments, PayPal. I tried to get an authorized .NET account, but couldn't because I was too young. And I really kind of deeply understood the problem that they were solving at Stripe. And so when I saw that they were looking for a kind of technical salesperson, and I didn't have any meaningful employment, and my friend Lucas, and he's a friend because he was so honest with me, told me that I was a wastrel surf bum and that I could do so much more with my life. I just decided to apply, and kind of sent me down the kind of startup rabbit hole in some ways. Many people think they are working at a startup, but until you experience what kind of compounding weekly growth looks like from the inside, it really is night and day. So this was kind of Stripe in 2012 when they'd emerged from private beta and were just growing like a weed. And quite frankly, I wasn't good enough, but it was a very nice experience. And that's where I met the co-founder of my company that I've started with. Is called Christian, and he was one of the designers at Stripe. So we became friends after our experiences there, and stayed in touch. And just under 3 years ago, started a little side project called Balance, and that's how I ended up working with him.
Got it. So let's move on to Balance itself then. Your vision for Balance is to create unstoppable banking and an open financial system. So, first, just to start off from a very high level, what does this mean and why is it important?
Yeah, well, I guess that it's not that we're going to create the unstoppable part. It's just that is the nature of Ethereum. I think that the term decentralized is a very interesting one, and it describes a lot of properties of the community and the ethos behind Ethereum and why it started. But for me, I've found that the term unstoppable is something that really kind of pokes at people. When you suggest that something cannot be stopped, a lot of people ask why. And the sets of smart contracts that exist on Ethereum for debt, for storing value, for sending it and receiving it, for issuing loans or derivatives or shares or tokens. All of these things are unstoppable. There is no government or company that can reduce their function to zero. There is no regulation or law that can enforce that they stop. And I find that describing Ethereum as an unstoppable computer rather than a decentralized one helps people who aren't particularly experienced in a space kind of latch on to some of the more interesting properties of decentralization. We all understand at a core level that if the government decreed that Wells Fargo stop issuing loans, it would have to stop issuing loans. But if the government decreed that Dharma, a small startup in California who's written a set of smart contracts to issue loans on Ethereum, if it said to them, stop issuing loans, Dharma would have to simply throw up their hands and apologize and say, I'm afraid you don't understand how Ethereum works. So with Balance, we're just looking to wrap up these sets of smart contracts that exist from all these incredible teams into a friendly, easy to use interface that regular people can benefit from. And what that constitutes is essentially an open source bank, which will provide people financial services that are running on protocols just like Ethereum.
So, speaking of a crypto bank, what, in your opinion, are the things that make up a good crypto bank? What does a good crypto bank need?
Banking as a function kind of does two things today at a big level is it defends a database and it gives you access to your money. And then there are all kinds of services around that are involved. But if you think about it, we've solved the defending of a database. Bitcoin showed us how you defend a ledger with decentralized technology. So we know how to do a database that cannot be touched in a decentralized fashion. The bit that I think is missing is the ability to access one's funds again. So if you lose your passport, if you lose your ID, if you lose your PIN number, if you lose your password, if you lose your email address, if you lose absolutely everything that a bank has to attach you to it, you can still go into a branch or call someone or kind of initiate a set of processes to get access to your account again. And essentially, that's a huge part of the value that a bank provides. Is I can just put my money in Norfolk, England, and kind of take a trip to Indonesia and pull money out. And that's because of these sets of identification technologies that exist around the credit card networks and the PIN code system and the ability to do KYC with your password and PIN codes on your phone number. I mean, all of this technology is set up to check who are you and do you have a right to spend this money. And I think that second part is where a lot of work is going on now. There is so much work going into identity on the blockchain or around it, the ability to verify whether you're spending it or not. And the only technology we have for this identification process is the private key, is that if you have a private key, you are able to spend the money. And I think that much more interesting systems are going to come out, which identify you through a variety of things, from the way you walk to the way your thumb's veins are arranged, to your face, to the way you type, to the way in which you interact with a machine learning system, to the way you answer questions, to the way you jiggle the phone in your hand as you're typing out your password. I mean, there's just so many different avenues that we can use to begin to identify people. And there's so many amazing teams doing research on that. And so much kind of work in terms of hardware and machine learning software. That it feels to me like within the next kind of 10 years, we will be able to identify people to a strong degree in a decentralized way without needing a kind of centralized company to process the identity process. And if we do that, at that point, you can kind of have all of the benefits of a centralized bank, which stores your funds securely and gives you access to them when you need them, but without necessarily it needing to be running by a company balance, and instead be running as on a kind of network or a kind of collection of software.
So you bring up an interesting point about the identification layer of modern banking systems. Essentially, if people lose, say, their PIN code to their ATM machines, they can still access their cash, they can still access their assets by re-verifying their identification with the banks, which have their identities on their file. But for people who are storing their crypto assets by themselves, for people who don't trust exchanges or third-party wallets to store their assets for them, there's no such party to verify their identities. If they lose their private key or their recovery seeds, all their assets are gone. So how do you see this issue being resolved? Because this is a pretty significant issue, especially if your long-term vision is to create some sort of a crypto bank.
Yeah, I don't purport to have a precise design for how this is going to work, but it's merely a train of thought that I've been on ever since I met Stefan from Gnosis, where he talked about this problem and how we could kind of assemble, say, 100 know your customer providers and kind of do the game theory to make sure they don't screw you over. Perhaps they won't even know what's in your wallet, but they can open it up by flipping a bit on a multi-sig. My point being that if our solution to the storage of funds is a centralized one, if something like Coinbase is the end state for how we store funds, that is essentially a bank. We've all had times where Coinbase has not done what you've asked of them, simply because of their fraud algorithms. And so, we have an uncensorable financial protocol being interacted with by a censorable piece of software. And if that is the end state, and by end state, I mean, if that's what we're still using in a century, if we're still using companies and passports and KYC begging over email, I really don't think humanity will have moved more forward much. So in the long term, some kind of network that can identify you, or some kind of set of tools and software that can identify you to a strong degree, and then a kind of court system, a digital court system or insurance system to help people who are unable to recover their funds, even though they've done all the right things, feels to me like a much more interesting solution. And that could actually deliver the future that we've been promising with all of these open economic protocols.
And we're definitely seeing a lot of promising projects kind of heading in that direction, at least in the long term. But bringing this back to kind of the present day, can you talk a little bit about where balance is at right now? And in the distant future, what will users be able to do with the solutions provided by Balance?
Yeah, so right now we have one product that people can use. It's called Balance Manager, and it's a web-based application to interact with the most popular Ethereum wallets. So those are the software wallet, which is MetaMask, that lives in several browsers, from Chrome to Brave and Firefox, and then that has several million downloads now. And then there's two hardware wallets we support, which are known as the Trezor and Ledger hardware wallets. And so if you store Ethereum or any Ethereum-based ERC20 tokens on those wallets, you'll be able to view those, send them, kind of receive and view your transaction history, as well as use our integration with Shapeshift and other exchanges coming very soon to exchange your tokens or Ethereum for one another. So it's a relatively simple product right now for pretty advanced users. But what we've got coming down the pipeline this summer is our take on a mobile wallet called Balance Wallet for iOS. And the interesting thing this will allow you to do is to log into a variety of dApps using a QR code. And that's powered by something called the Wallet Connect standard, which is something we incubated in Balance and have recently separated from the company. It's something the Ethereum Foundation awarded a small grant to help us get started. And Wallet Connect should make it easier for people to link their mobile-based wallets to web-based apps. So you can imagine, instead of logging into CryptoKitties using a Chrome extension like MetaMask, you simply scan a QR code and connect the dApp to your phone. So that's a lot of the stuff that's, what I can say, is coming in the near term. And then, like, if the dream state, kind of in 10 years, would be for Balance to operate as a kind of Linux-like operating system for financial systems. So in the same way Linux provided an alternative operating system, we would like to provide a complete and alternative financial system. So we hope that people do fork Balance and kind of start it up in other countries, or deliver lots of amazing financial services that are provably fair and running on kind of unstoppable protocols. I believe about 3 billion people are estimated to come online with the combination of Android phones and satellite internet and base stations and solar panels. And it'd be exciting if people are tapping on and using software that we made. So that's the kind of near-term realistic goal, and the kind of hallucinogenic future that I kind of paint sometimes in my mind.
Yeah, for sure. And that there's a lot to unpack there. So let's start with the wallet first. So there are lots of crypto wallets apps out there. And most exciting to me, as you mentioned before, are these multi-sig wallets, which for listeners who might not know, basically allow trusted parties to help access your wallet if you ever lose your private keys, which are essentially the only thing that gives you access to the claim over your cryptocurrencies. But despite a lot of these interesting things being done in the wallet space, you still mentioned that most of them are actually unmaintained and unprofitable. So I'm curious as to why you think this is so, and what will Balance do differently?
One, if you look at the real world, wallet companies don't have a very large market capitalization. We don't pay wallet companies huge sums of money to put money in to a leather pouch that we might lose. So there's quite a strong analogy between wallets in the real world and wallets in the digital world, where essentially a wallet delivers you some kind of nice wrapping for your funds, but if you don't look after it and it gets stolen, they're not going to help you get that money back. I think one of the huge value adds of banks is simply that you don't have to look after your money. Every bill that they charge you, every kind of way they extract your funds, is because it costs so much to look after your money. And so we don't view ourselves as building a kind of wallet. We view ourselves in the long term as we need to build an open source crypto native bank. And that is, I guess, just separates us in terms of ambition, because wallet companies make small revenues on their fancy kind of leather wrappings that are okay, but banks just make enormous revenues from taking on risk and trying to build incredible systems to manage your funds and give you access to them, and they do a lot of work to secure that. And I think just because we're viewing our job as a much larger, that we just view the wallet as one small piece of what we're doing, but that it unlocks the ability for us to make a lot of money by offering financial services that live on some of these economic protocols.
And I'd love to dive more into the notion of making a crypto bank as well. But before that, I'd like to move back to the point that you talked about by basically allowing people access to their crypto assets through something as intuitive or easy to use as a QR code. And to me, by removing the frictions that are inherent in accessing cryptocurrencies, you promote more usage of these cryptocurrencies. But at the same time, we see a lot of scalability issues with a lot of the major blockchains. And you've mentioned before that blockchains are good for transactions with high value and actually low frequency. So can you give some examples and maybe how Balance fits in this picture as well?
For people who are concerned about the scalability challenges, the reality is that this is the supreme core of computers. It's a trustworthy computer that that you can depend on. I think that for anyone that has come from the Web 2 world, worrying about scalability is this kind of perpetual shriek that everybody puts out, where they all assume that this needs to be an AWS competitor, and they're just fundamentally misunderstanding what's been achieved with Ethereum, and that's why they keep viewing it through the wrong lens. Everyone says, oh, Ethereum has failed to scale. It's not. Ethereum has succeeded in creating trustworthy computing. If you want to run on AWS at any point, they can shut off your code and they can stop your project. If you want to kind of run some kind of particular financial transaction with them, they will shut down your account. This is not true of Ethereum. It's a permissionless protocol that should be used as a kind of digital supreme court for smart contracts or kind of code-based agreements. And the Supreme Court cannot handle every trivial little case that currently exists. Now, scalability is coming in the form of plasma and sharding and all kinds of different scaling techniques. And they're building out the kind of municipal courts and local court systems such that you can handle more of these tiny, trivial transactions. But expect to see Ethereum fees reaching kind of $50, $100, maybe even $500 for a single transaction when people are spamming the network and lots of successful applications take off. And in that environment where fees just go astronomical, people will say that the game is over. But I believe that is actually showing the value of Ethereum and that its computational resources, its trustworthiness, will only be useful at the top end for the most valuable financial transactions. And those will be, I think, debt and the reconciliation of large plasma chains and another kind of scaling techniques, that we should only go to the main chain for very specific things. So I just kind of want to push back on this hysteria around scalability and say that until a network comes out and proves that they have cracked scalability in the hostile environment of the real world, I'm very skeptical about anyone taking over Ethereum's place. I am excited to see things like Cosmos and Dfinity launch, but they've got a long, long way before they can prove that this is possible.
For sure. And moving slightly away from the product and more on kind of the governance of Balance itself, you wrote before that you're interested in kind of using Aragon as a way to run Balance, basically. So for people who are not familiar with this project, can you explain what Aragon is and how you would use it for Balance?
Yeah, this is something we opened up as a kind of pull request against Aragon's Nest program. So let's just take a step back. Aragon is trying to recreate many of the structures of existing organizations, but do this entirely in code on Ethereum. So you can imagine the ability to control funds in a company right now is essentially a flow of power from the CEO to the board to the accountants, and all that flow of power can be described in code. And so in Aragon, you can create distributed autonomous organizations or DAOs that have certain powers over funds and voting rights and allow certain interactions. And it's come from an incredibly fired up and thoughtful team who are really thinking a lot about the governance structures that exist today and the governance structures that can exist tomorrow, given this technology. So it just struck me as potentially a good tool for us to use when it comes to shifting Balance from a kind of incorporated company that lives in Delaware and kind of migrating that up into Ethereum entirely. I think that transition process can be very interesting, and I'm excited that Aragon will have done a lot of the thinking there around how that should be structured and how that should function. So it's something I'm keen to explore when we actually have a serious business. I mean, right now we're just trying to build the business in a fairly centralized fashion, but decentralizing it over time, particularly as it begins to store more and more of customers' funds, and making myself accountable as the leader on a kind of regular basis is something I really want to do. So I'm excited to explore that. I think that's the kind of thing we'll probably spend a lot more time and energy on in like 2 to 3 years. When we have a much stronger business underlying it.
Yeah. And speaking of business growth, I think the probably most recognized company in crypto right now is Coinbase. And to me, they're almost like the Amazon or Google of the crypto space. And a lot has been written about their power in essentially moving markets by announcing which coins they will list. But beyond that, I think they also probably command a lot of brand equity and network power just by being kind of the most recognized on-ramp in the crypto space. So this might be a very kind of macro level and long-term question, but do you foresee them essentially snuffing out competition or up-and-coming projects by spinning off their own versions of maybe crypto banks or crypto credit services or their own versions of non-custodial exchanges?
No, I don't think that Coinbase will ever have a successful open source project. I think that there is a culture of creating wonderful, centralized, closed source tools that live on top of these protocols. And I think they're very good at that. But the culture around creating an open source project is completely different. And I think it's a decision that you have to make early on. That is a company that does a fantastic job of security and regulation. Those are the two functions that Coinbase serves for our community, in that they are one of the biggest holders of private keys and of Bitcoin, and they haven't been hacked. And so long as they don't get hacked, they're doing an incredible job. But I don't believe that they are a fertile environment for open source projects. And I don't believe they'll spin out any open source projects that have a meaningful impact. Simply because their mission statement misses the word source from it. They say, we are building the open financial system. We're helping build that out, which is wonderful. But they're missing the word source, and that's so key. And it's not to say that we don't need companies like that to exist. I think they have done more for the massive rise in the price of crypto assets than any other project. And that has helped secure the network, which has helped attract people, which has helped improve the network. But I don't think, and I can't imagine a world in which a bunch of people working at Coinbase with 0.0000001% of the company end up working on innovative open source financial software.
Speaking of these open source and innovative projects, I know you've spoken favorably of a few very innovative projects before, for instance, Bloom and 0x, which, for disclaimer, I'm a tiny investor in. And one thing that I think is not talked about enough is how these quality projects or these innovative new ideas and new teams are working together and collaborating. So to kind of close this off, can you give us a view of what's in store for Balance? And are you actively working with other crypto projects, or are there projects that you would like to work with for Balance?
Yeah, I mean, the project I'm most excited about is Dharma, which is kind of creating a flexible set of smart contracts for debt. And we have decided to try and pursue offering student loans to people studying programming and crypto economics. And so releasing that product later this year is something I'm really looking forward to. In my kind of personal life, I've helped a few people get into these programming courses, and I've been on one myself. And it changed my life, and it's definitely changed all of my friends' lives and my family's lives. And I believe it's the highest impact thing somebody can do to change their economic future, is to go and not necessarily become an engineer, because very few people can, but to go and learn the language of programming. And if we can, in some small way, kick off a new form of loans to the people who wish to go study these things, and help create a kind of system where alumni will be funding future students, I think that will be a huge success. So that's one of the big products I really want to launch this year, and we're working on that as a team, and plan to kind of focus on that towards the last quarter.
Awesome, man. I'm excited to see more products and more announcements from your team very soon.
Yeah, it's been a really fun journey, and I've been spending a long time thinking about Ethereum on and off since I came across it a few years ago and tried to help Vitalik and Gavin a little bit. And I've been kind of trying to answer it for myself, is what is Ethereum useful for? And the answer that I've found, and I think that we've agreed upon as a team, is that financial services are the killer DApp when delivered in a easy to use interface.
Absolutely. And for people who might be interested in breaking into crypto, just as a final question, do you have any advice for what they should do beyond, say, learning how to code? If, say, someone's a business operator, what can they do to really add value to the space?
Yeah, sure. I would say the number one thing is listen to all of the Epicenter podcasts, listen to all of your podcasts, listen to all of the podcasts that they like. Most people kind of pick off 2 or 3 episodes and don't really dive in. I last year listening to the Epicenter podcast helped me enormously because you actually get to hear it from the horse's mouth. I find the white papers are unintelligible. They're impossible for normal people to read, and they're terribly written. But when you listen to the people behind these protocols, the people writing the code, you can get a sense for what they're like, and whether they're the kind of people who are just going to take the money and run, or whether they sincerely believe in what they say. And everyone's got an instinct for that. So I always recommend people go to the source material of the people who are working on these projects. The interesting thing as well with Epicenter now is we've got this catalog of people making claims with their token sales, and you can simply go and review that they've kind of been offline for 6 months. So so there's lots of ways to get signal in this game. Many people think that they do their research, but I will read every single tweet someone's written, every single tweet they've liked, everything that is about them before making an investment decision. And it helps me to kind of understand their brain. So it's something I highly recommend other people do as well. And once you do that, you will start to then get a sense for the kinds of people you would be comfortable working for 10 years. And if you're not comfortable working for someone for 10 years, don't apply to work there. And if you find someone you believe in and you trust, try and help them.
Yeah, that's absolutely amazing advice. So thank you very much for sharing your thoughts with us. And that wraps up another episode of the BlockCrunch podcast. If you're interested in learning more about what Richard is up to, definitely follow him on Twitter at Rick Burton, where you can learn a lot about his latest thoughts as well as where balance is at today. Once again, I've been your host, Jason Choi. This has been the BlockCrunch podcast. You can follow me on Twitter at Mr. Jason Choi. That's MrJasonChoi. I'll be sharing our latest episodes as well as transcriptions for some of our interviews on there. And I look forward to seeing you at the next episode.